Gold prices are volatile on Wednesday. Now, what we saw is gold have a strong pop in overnight trading right near that $16.50 an ounce level, but then the metal backed off and turned negative. What do you think the main reason for that was?
I think the main thing is that there's been some more positive news, particularly coming out of Europe and the US economic data of the last couple of days, which just helped give gold that little bit of bounce that it's needed to stop the softness in pricing that we've seen over the last few days.
So does that mean that in the sell-off that we're seeing now, is that a dollar and inverse dollar trade?
I don't think it's necessarily a sell-off. I think it's just thin trading in these days up before the holiday really kicks in. So sometimes you can see outsized moves. Don't necessarily mean a great deal.
Now, we saw today, Will, that European banks went to the European Central Bank for about 500 billion euros of 3-year low-interest funding. What does that mean for gold, short and long term?
The short term is that that's good news for risk assets. Hopefully, it provides a bit of stability, and I think that's one of the reasons why we've seen a bit of a pop in gold. The longer term news on that front is that I think the longer term picture for the Eurozone is still uncertain. And what we've seen this year, 2011, has been a year of anemic global growth coupled with some pretty volatile macro conditions. And we think that 2012 will be a similar scenario from the macro perspective. And that's going to be the broader driver of gold prices in 2012.
So it's more of a deflation rather than inflation environment, because you could argue the ECB becoming the lender of last resorts for banks is actually very inflationary. So is that not the main concern? I
think it is, but that's more of a longer term concern. I think right now what we've seen gold react to most is particularly the euro.
And then bringing it back to the short term, the next 2 weeks headed into the end of the year, are you going to expect continued low volume and choppy trading? Or do you think we're going to see a lot of portfolio managers step in here and buy to show they own gold, still up 13% for the year?
I think that if last year is anything to go by, we saw a very, very strong end to the year for gold. And that's, at this time of year, we see a lot of portfolio managers rebalancing portfolios. And now is a good time to get out of certain other asset classes that have perhaps underperformed this year and get into gold. If we look at the global holdings for gold ETFs, they've never been higher than they are right now. So the long-term physical buyer through the ETF market is still very much there and is still a big force in this gold story.
All right, thanks, Will. I really appreciate it. So the next couple weeks, kind of choppy trading for gold, but the long-term buy and hold gold investor is still intact.